Guys, S&P record high, all sectors green, maybe except for utilities, and the VIX back below 24. Let's get to Bob Pisani. Hey, Bob.
Hello, guys. Happy Thursday. Yeah, new high, but there's a little bit of bifurcation occurring. This is slightly different than we saw in November, December. Take a look at the sectors. Yes, banks are doing great, of course, on that yield curve steepening. That's the major story there. Tech is back again, and consumer discretionary is strong, but cyclical sectors, the energy industrials, are lagging a little bit, along with the defensive groups like consumer staples and utilities. This is a slightly different story than it was in December. We may have a little bit of a new paradigm developing. Just take a look at the banks, though. I know David mentioned them, but really very impressive moves in the last few days. Remember, the bank index was down about 10% in 2020. It was a loser, even though it has the appearance of coming on strong because we're ending the year strong. But this has been a great couple of days for them. A lot of confusion yesterday, a lot of emails from friends saying, how could the markets be up with all this chaos in Washington? And Bob, whatever happened to the idea that a blue wave is bad for the stock market? Just a lot of cross currents. Important to explain what's moving the markets right now. I think in terms of the buckets, I call them. The stimulus and the vaccine versus the virus and the taxes that are out there. So the most important thing is the stimulus now, because it means more checks in people's hands. It means more infrastructure. It means more aid to local governments overall. That's moving the market. Then you have the vaccine versus the virus. That's going to determine the pace of the recovery. Are we going to get a strong recovery beginning in the second quarter, the third quarter, the fourth quarter? That's the main determinant, and that's a wild card. There's another kind of wild card sitting out there, and that's the whole taxes issue. That's been sitting there for a while. We have to figure out what's going on with that. Now, everybody says, oh, you can't raise taxes right now. The economy's too weak. Maybe that's an interesting narrative, but capital gains is a different story. Remember, the top tax rate for capital gains right now, top earner rate, is 20%. Biden's proposal is to move that to 39% for those making over $1 million. And you might say, oh, that's nothing. Well, it's not nothing. It is a substantial part of the universe of people that own stocks, or wealthy people that make money. They buy the stocks. And the bulk of the capital gains are in technology. That's why technology was weak yesterday. Now, if you look today, we got a little bit of a bounce back in technology and sort of mega cap stocks. This is where a lot of the capital gains are. And that's an indication that this is not an immediate worry for the market. But if you think about it, well, you might not be able to have a big increase in taxes immediately. Capital gains on rich people, that may generate a lot less controversy. That's what you call low-hanging fruit, and I think that's going to be out there for a while. Meantime, we have to get through the COVID winter. You see some of these announcements today? Bed Bath & Beyond, not great. Missed on earnings, the guidance. There was no real earnings guidance at all. Flat comp store sales for the current quarter. You know, there's a sign, signs of sales kind of on the weak side, on the retail side, with people not having much in the way of checks. That's why these stimulus discussions are going to be so important. One thing for sure, we're drinking a lot more. Did you see the Constellation report? Beer sales way up. The beer division, David, shipments up 28%. 28%. And I think that is a new historic high there for Constellation. I'll check that, but it looks like it to me.
Shepard Smith here. Thanks for watching CNBC on YouTube.